Hello traders, welcome back to the Forex Geek channel where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the power of the monthly forex strategy. This approach allows you to take a step back from the daily fluctuation of the market and focus on the bigger picture. By analyzing the longer time frame, you can identify trends and make more informed trading decisions. Whether you are a seasoned trader or just starting out, understanding how to implement a monthly strategy can significantly enhance your trading performance. Stay with us until the end of this video to improve your results and you find a way to apply this strategy to your already existing strategy. Now, understanding the monthly forex strategy. This is a trading approach that focuses on analyzing currency pair over a longer time frame, specifically 1 month. This method allows you to see the overall trend and make decisions based on more stable price movement rather than reacting to short-term fluctuation. When using a monthly strategy, you start by identifying the prevailing trend of the market. This means looking at whether the price of the currency pair is generally moving up or down or in a sideways movement over a month. You can use tools like the moving average or trend lines to visualize such trend. If we use our simple moving average, you still see that it's moving towards the downside. Conversely, if you make if you are making lower highs and lower lows, this suggests price is in a downtrend. Another key component of the monthly strategy is risk management. It is essential to set your stop loss and take profit level based on your analysis. Your stop loss helps protect your capital by automatically closing a trade by if the price moves against you by a certain amount. Setting a take profit level allows you to secure profit when price reaches your target. Now, in case I would want to take a trade based off of this, when price has broken structure and come back to form a lower high, I can take my profit. I can put my stop loss just above the recent high, put my profit in the next swing low. This is how it's supposed to be. Now, finally, understanding market condition is crucial. Economical indicators, news events can significantly impact currency prices. You can better anticipate potential market movement by staying informed about upcoming economic releases or geopolitical events. Let us look at the trading strategies using the monthly forex framework. Now that you understand the basic of the monthly forex strategy, let's explore some effective trading strategies you can implement using this framework. We would focus on three key strategies, which are the long-term trend following strategy, the Fibonacci retracement levels, and the candlestick pattern. The first one being the long-term trend following is a strategy. This approach involves identifying the overall direction of the currency pair and making trades that align with the trend of the market. To start, look at the monthly chart of your chosen currency pair. Identify whether price is in an uptrend or a downtrend. This is my example. Price is literally in a downtrend. Price is in a downtrend. Identify whether price is in an uptrend or in a downtrend. You can use the moving average to help clarify this. For example, you can use the 50 moving average. If price is consistently above the 50 period moving average, it means that price is in a bullish trend. If it's consistently below, it means price is in a downtrend. As you can see, price has been waking up, but it is trading towards the downside using the 50 moving average. This is how to identify the trend. Now the next way we can trade using the monthly forex framework is by using Fibonacci retracement levels. The second strategy involves using Fibonacci retracement levels. This method helps you identify potential reversal points in the market after a significant price movement. You can apply this strategy first by identifying a recent high and low. Let's assume that this is a recent, let me cut the chart. Can identify that this is a recent high, lower high, and this is a recent low. So we would have to use the Fibonacci tool to draw the retracement levels between this point from the swing high to the swing low. These are the retracement levels. The key levels we are meant to watch out for are the 38 level, the 50% level, and the 61.8 level. I repeat, the key levels we are meant to watch out for are the 38.2 level, the 50% level, and the 61.8 level. This level often acts as a support or resistance level. Now the third way is through the candlestick pattern. The third strategy focuses on the candlestick pattern. This pattern can provide valuable insight into the market sentiment and the potential reversals. When analyzing the monthly time frame or the monthly chart, look for key candlestick formations such as a hammer, an engulfing pattern, or dojis. This pattern can signal that the reversal is imminent. Now let's assume that we did not know that price wants to reverse at this point. The moment I see this candlestick pattern, this bullish engulfing, I know price wants to reverse. Look at this side too, this area too, a bearish engulfing shows that yes, price wants to reverse. Let's look for a pin bar example. Now looking at this pin bar, this inverse pin bar at this area, we can notice that after the pin bar and series of candles, price decided to go towards the down direction. See another pin bar. After this pin bar, you notice price reversed at this area. So this pattern indicates strong buying pressure and may suggest that it's time to enter a long trade. That's if we see a bullish pin bar or a bullish candlestick pattern. Look at this one has a bullish engulfing and a pin bar. So this is a signal to buy this market. So we have to look for buying opportunities to enter a long position. And always consider the market context and the overall trend before making any decision. So you always analyze the market direction, the market structure before making any informed decision. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, please do well to leave a comment below. We want to be in touch with you. Do not forget to like, share and subscribe. turn on the notification bell so that you will never miss out on more trading tips and strategy. Thank you for watching, and I will see you in the next video.